Hello and welcome to another update video about Sand. Yeah, Sand shows some short-term strength, but I haven't got anything to add really to the analysis. I just do this update because a lot of you asked me for one, but there isn't much to update. The price turned around where it needed to, so if anybody used this area to enter, you can just adjust your stop loss. Just manage risk now and let it run. And if it pulls back and drops back into the support area, you could, and it's just a general idea, scale in again, or you have taken some partial profits, or you've moved your stop loss into profit in the meantime. Yeah, so that's obviously up to you. Depends on your personal strategy, exposure, and willingness to spend time on this. You know, depending on how much time you have available. But the chart still shows a potential inverse head and shoulders pattern. For that, however, I'd like to see a more pronounced right shoulder. So remember here, neckline breakout point is likely going to be around 47-48 cents. We've got our left shoulder here. We've got the head, textbook. Yeah, and the right shoulder. I mean, is this it? Maybe. Can I rule it out? No, but normally we want a certain sense of proportions in these inverse head and shoulders patterns, something like that, okay? Which could take it into December, January. I don't know. I mean, maybe not, but then it's probably not a proper head and shoulders or inverse head and shoulders. But to be honest, we don't need that method anyway. We've got the Elliott waves. They give us normally an even better understanding of context, you know, if we use them. There are basically two scenarios. In the first one, I assume that we topped in an ABC structure, and this is a possibility. And if that's the case, then we are going to make another low, possibly another bear market low, and that will get much more probable below 30.9 cents, which is the 78.6 Fibonacci retracement of this rally to the upside. The rally shows very, very questionable, really questionable 5 waves up, but we can allow for it. It's just that in the yellow wave count, yes, we've got a potential complete leading diagonal here into the November highs, but what I labeled at the time as a 4th wave wasn't really a very healthy 4th wave. It was very rapid, an unusually strong sell-off in a flat structure, which is normally, or in a wave 4 generally, because a wave 4 is oftentimes a flat structure. Well, this one probably isn't, because it's quite impulsive on the way down. But then again, this happened so fast, you know, on that day, that you can't really read the subwave structures very well. All I want to mention here is that whatever that was here, if this was a wave 4, it was unusually short. And that for me sort of damages a little bit the reliability of the chart. But, you know, let's see. I mean, I'm counting this primarily as wave 1 to the upside. So all 5 waves complete, because I'm counting this dip that happened here a few weeks ago as a wave 4. And then the move up here could have been the wave 5 of 1. And now, after we have these 5 waves up complete, we are in the wave 2 pullback. The pullback certainly has come down quite deep, but it's not even touched the 50% retracement level. I think it would be preferred for it to get there. But overall, I mean, this is already a complete corrective count. Yeah, this is technically complete, where we had an A wave, a B wave, and then here, this needs to be WXY. If this is finished as it is, it would need to be a WXY. So it's either this, WXY, and then the ABC structure here unfolded in the Y wave. Let me just change the color. Yep. So WXY with a very long ABC structure. And this could have been all of wave 2, and we're now really running, but I haven't got 5 waves up yet. I have only 3. So that means it could, it doesn't give us a very clear view if the next wave up has started in wave 3. Yeah? So we haven't got that, we haven't got those 5 waves that we actually need. So a little bit more price information is needed. Yeah, we have very limited data at the moment. Yes, it's good that we broke out of this corrective price channel. And yes, we also broke above the B wave high. So that means if the correction continues, then this year was only a larger A wave of the wave 2 correction. We're now making a larger B wave and then come down in wave C of 2. But that's stuff that we cannot control, right? I mean, I'm just sharing with you some possible pathways here, which are likely, but they are pathways we cannot control. Focus on what we see. What did we see? We had a support area on the chart. It did hold. Anybody who wanted to could have scaled in, add a position potentially, and now we just let it run. That's my update about Sand. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure you follow us on Instagram and Twitter, and you can find the links in the video description. Thanks a lot for watching. Bye-bye.